There are a variety of entities available for you if you're interested in consulting, but the common ones that you should consider are the limited liability company and the S corporation. This is because these entities offer the most flexibility and the best tax advantages for a consultant. Be aware that if you begin your consulting business and you don't form an entity, if you are a single person operating your consulting business, then you'll be considered a sole proprietorship. And if you're operating the consulting business with more than one owner, then you'll be considered a general partnership. A sole proprietorship is a business that's carried on by one particular person, and it's not a distinct legal entity from the individual owner that's operating it. An example of a person who may set up a sole proprietorship is an accountant who would be able to get malpractice insurance to cover any liability issues that arise from the services that are performed. Some of the advantages of the sole proprietorship are that it's easy to form. You don't actually have to file any document with any governmental agency to form a sole proprietorship. You may want to file an assumed name certificate if you're going to be operating your company in a name other than the name of the individual owner, but this is often not required. Another advantage of the sole proprietorship is that it's inexpensive. You don't need to hire a lawyer to set up an entity, and you don't have any filing fees. Another advantage of the sole proprietorship is it's not subject to double taxation, like a C corporation would be. Any of the profits and losses of the company of a sole proprietorship would be directly taken on that individual owner's tax return. The profits and losses are only taxed at the individual level. There is no entity level that would be taxed in the sole proprietorship. There are a number of disadvantages to operating as a sole proprietorship, and these are pretty significant. First, the individual owner will be subject to personal liability for the debts and obligations of the company. There is no shield as there would be if that person set up a limited liability company or a corporation. In addition, with a sole proprietorship, if that person is working with employees and would like to compensate them with options, there is not that ability to do that with a sole proprietorship. And finally, there is no continuity of existence for a sole proprietorship. So if the individual owner of the sole proprietorship dies, then the company will no longer be in existence. The ideal situation for setting up a sole proprietorship is if a person wants to set up a company quickly and easily and isn't concerned at all about liability issues and doesn't need outside investment. If there are two or more individuals involved in a consulting company, then they'll likely be considered a general partnership. A general partnership is an association of two or more people who are involved in a business for profit. The general partnership is distinct from the partners. Some of the advantages of the general partnership include the general partnership is easy to form. Typically, you don't have to file anything with the state or with the county to be considered a general partnership. Sometimes there are certain counties that ask for the general partnership to file a certificate of partnership, but this is often not required. Another advantage is that it's relatively inexpensive to form a general partnership because there are no filing fees. One thing to keep in mind is that you may need to talk to an attorney to form a partnership agreement between the individual partners, and this will lead, of course, to legal fees. Another advantage to a general partnership is that the general partnership itself is not taxed. Any of the profits and losses of the general partnership would flow through to the individual partners. So the general partnership is not subject to double taxation. Another advantage of the general partnership is that the partnership itself can own property and can transfer property in the name of the general partnership because it has a distinct legal entity from the individual partners. One of the largest disadvantages is that the general partners are personally liable for the debts and the obligations of the partnership. That means that the general partners' personal assets can be touched if there are any debts or obligations of the partnership that need to be satisfied. Another disadvantage to the general partnership is that it'll be difficult to get outside investment. Outside investors are not likely to want to invest in a general partnership because they'll be subject to unlimited liability, so it makes it a very unattractive investment form. General partners have fiduciary obligations to each other, which makes this a significant disadvantage of the general partnership. This means that general partners have to act in the best interest of the other general partners, and if they don't do so, then they'll be subject to liability. This is different than limited liability companies or corporations, where owners can decide if they want to have these heightened fiduciary duties by managing the company. The general partnership is ideal for those individuals who are interested in starting a company quickly and cheaply and have liability exposure due to their profession, such as a lawyer or an accountant, where you wouldn't be able to avoid liability for malpractice in these professions. Otherwise, as a consultant, it's important to look at other limited liability entities that can be used to operate the company.